Hi friends, welcome back to the channel. So we're talking about First Republic Bank, and it looks like there may be a deal made for it this weekend. I want to go through some of the headlines. I'll share my thoughts and get yours as well. So jump right in here. First, FDIC prepares to place First Republic under receivership, right? This is just coming in as of recording this 3 hours ago. So this is breaking news. And basically, it was rumored all day that this might happen, that FTC come and take it over basically, and then sell it off. And then who would they sell it off to? Perhaps JP Morgan and PNC. They're rumored to be wanting to buy this thing, and obviously they're going to want to buy it on pennies on the dollar. That's sort of how this game is played. One thing that is sort of why people haven't jumped in immediately, etc. Is First Republic, in my understanding, has a lot of exposure to commercial real estate, and a lot of these mortgages / loans are essentially toxic. You don't want to touch this stuff. So that's why if you do, you want to get, essentially pennies on the dollar to take over this thing. We will see what happens. The market has sort of got wind of this, right, early on. Currently, as of now, First Republic Bank is trading at $2.33. I'm just looking at the chart here. Back in May, it was like $150. So, it's down 98-ish% in that range. If you look at the day of this thing, it was down 43%, and then after hours, it down another 33%. If you understand how percentages work, I'll just give you a gist of it, is you can actually fall double digit every day. So for example, if I have a $100 stock and I lose 50%, it goes down to $50. I can lose another 50%, then it goes down to 25, another 50% down to 12, right? Another 50% down to 6, another 50%, down to 3, and then ultimately you're going to get pretty close down to zero-ish. But they may halt trading on this thing by Monday, and there's also reports whether or not it would even qualify to even be in the S&P 500. It's just getting to that point. And I understand here this is kind of crazy. It's a dividend yield of 30%, but they're just going to cancel that. So don't be looking at this like, oh my God, look at this dividend thing. It's not. They're not going to pay any money. There's no money there. They're trying to sell off it essentially. Also too, it's interesting because I found it curious, to be really frank, with this First Republic news coming out, that the market didn't freak out. It didn't, which is very interesting. We had an inflation read on the PCE. So there's two reads. There's the CPI and the PCE. The Fed looks at the PCE, but roughly they tell you the same thing. Roughly tell you the same thing, that inflation remains stubbornly high, is the phrase that everyone keeps using. So we're at 4.6. Remember, the Fed wants it to be at 2%. It's going to be tough to bring it down, right? Housing costs are still up. You still have to pay your employees money until you fire everyone, right? Essentially. And that's where it is right now. And we'll keep track of this. Also, too, the GDP, it did go up, but just a little bit, 1.1. So the economy is slowing a little bit. And then forecasts are, for the next couple of quarters, we may get negative GDP growth. We'll see, right? I can't predict future 100, but I'm just telling you. And then those forecasts are coming from the Wall Street Journal. So we have, I think First Republic is like a third bank to break, I should say. So what is it? It's like Silicon Valley, and then Signature, and now First Republic. If I missed any others, please let me know. And then also too, Credit Suisse, which isn't not an American bank, also folded. And this is something that kind of frustrates me, and sort of why I try to do my channel with you guys. Is I like to talk about the facts, and also too, I'll share with you, and it's my opinion. So we know that the headlines were like First Republic Bank is uncertain, right? And one of the things that I'm fine with is bank regulation, totally fine with. And if you have a different opinion, I'm fine with that as well, right? We can have different opinions on what we want. We want more regulations or less regulations. So I tend to be on the side of more regulation. That's my opinion. Now, the thing is why I like to mention facts and stuff like that, because sometimes I don't like when people just make stuff up. It always feels strange to me. So after the 2008 financial crisis, right, there's essentially a bunch of banking reforms. So the Dodd-Frank was essentially the big thing of this, and you guys can look it up for yourself. Like I said, I'm not making stuff up. So it's back in 2010, and then this is both Democrats, Frank and Dodd, right? Barney Frank, Chris Dodd, and then it was signed into law by Obama, and then they wanted to, do things like, you can find out here, you guys can see it for yourself. Consolidate, regulatory agencies. They want consumer protections, more regulation of financial markets, right? And they had, what was this other stuff? Increasing international standards and cooperation, etc. They just, wanted more regulations. I'll just keep it simple like that. Then later, under Donald Trump in 2018, they wanted to repeal parts of the Dodd-Frank Act, right? You guys can find it right here. And the basic gist of it is that if you want to deregulate things because you feel like regulations slow, economic growth. That's the basic notion of it, right? The idea why you would want regulations is you feel like, well, we don't regulate things, then you may have, say, maybe too much growth or too much risk, this kind of stuff. This is essentially the name of the game. Is you either decide you want more regulations or less regulations, right? That's it. And you can have an opinion on which one you want. I just want to make sure that we're very clear that there were more regulations in 2010. That would have been under Obama, and then under Trump, there were less regulations in 2018. Okay. Now there was a report that came out, and the Fed was like saying, hey, when the Trump era, when we deregulated, that led to things like the Silicon Valley Bank failure, right? Less regulations, more, bad things that the banks can do. And we had talked about this before on the channel several times. The Silicon Valley Bank would send basically lobbyists. And it wasn't just them, but, many banks send lobbyists to try to say, hey, deregulate us. And it was all about where your sort of how many deposits you have. And the higher you get on the threshold, the more likely the Fed will have more oversight on you. And then the banks would always want to keep raising that threshold, essentially. Also, too, just take a look, guys. This is sort of where we get into the more politics game of this stuff, but I'm fine talking about it as long as we understand on some facts, okay? So politics-wise, though, then you can read headlines for yourself. So Trump deregulated railways and banks, and he blames Biden for the fallout, okay? So this was back in March, and this would be the way that you would play it politically if you deregulated things, right, under your watch. But then the next guy who comes in, all these railway and also bank failures happen is under Biden. Then it is certainly the political play to say, yes, it's Biden's fault. Biden did it all. It's all his fault, right? That's the political play. But I just want to make sure you understand the facts of this stuff. Is that it was deregulated under Trump, which is true. So you guys can make the determination on whose fault it is. And so that's why I mentioned facts. Not just making things up. This is an article in 2018, and you can read the headlines. Congress approves first big Dodd-Frank rollback, right? So again, 2018, there were rollbacks, and I already told you my opinion. I'm fine with bank regulations. I lived through the Wall Street crisis of 2008, and for me, I would prefer to regulate banks. That's my opinion on that. So I just want to make this clear. However, people can have different opinions on these things, okay? None of us are making anything up at this point. You got to decide, do you want more regulations or less regulations? So back in 2018, Paul Ryan, this is the House Speaker, Wisconsin Republican. You guys can see this here. And he would say, okay, we got to get rid of regulations because we want to free our economy from over-regulation, okay? So some parties will have a political point of view that if you have too much regulation, it puts too many, seatbelts on the economy, and let's just, take off that seatbelt and let the economy go crazy, right? For example. And this is what Ryan said. He said, our smaller banks are engines of growth. By lending to small businesses and offering banking services for consumers, these institutions are and will remain vital for millions of Americans who participate in our economy. Now, to be fair, I am totally fine with promoting small business in the USA. So I actually do think this is a winning issue for the Republicans to say, hey, we're a party of small businesses and we want to promote small business, these kind of things. And part of promoting small businesses, we need to make capital available to them, right? And this would be through the regional banks. So be it, you're say a restaurant and you want to, borrow money to expand the size of your restaurant. I'm 100%, I get that, right? And so I want to say that in terms of rhetoric, I think that's a winning strategy for Republicans. The trick becomes obviously then is, how much deregulation is good and how much regulation is good, right? So as long as we're clear, we're talking about regulations this whole time. And so the argument for deregulation is that it's vital to the economy and especially small businesses. So that's the argument they would make. Now, remember though, again, it depends how you want to play that politically. Because if you go on to the other side, which I want to share with you guys, so this would be Nancy Pelosi's point of view. This is back in 2018. She says it's a bad bill under the guise, right? Guise like costume, right? Under the guise of helping community banks. The bill would take us back to the days when unchecked recklessness on Wall Street ignited a historic financial meltdown, okay? So even back in 2018, they were arguing over should we regulate or deregulate, right? Where more of the Democratic point of view, and Nancy Pelosi will say, well, if we deregulate, you're just going to have, too loosey-goosey with money, and you're then going to have another meltdown. So I'll let you guys decide, which side you fall on. I already told you my personal opinion on this. I'm fine with more regulation, but I understand the argument of why you would want to deregulate. However, Nancy would say that, and Darren would say that that's not necessarily the case. You're just doing it under the guise of small business. And again, I'll let you guys make up your own opinion on that. I'm just telling you sort of, this is why it gets complicated, because you have to decide. And then already when you bring in politics, people have already made up their mind, regardless of the facts. So I just wanted to be very clear on this, is that, do you want more regulation or do you want less regulation, right? And that's essentially the crux of these things. Take a look at some more, and this is sort of now bringing it into today, right? What we're talking about now, headlines. Fed seeks stronger bank rules while detailing oversight lapses. And there's a crazy thing that's going on right now in terms of the world of politics to understand sort of what's going on with these things. The Republicans, right? So this would be Patrick McHenry. So he's the GOP chairman of the House Financial Services Committee. He's going to say that more regulations is not what we want. That's what he's going to say, okay? So he'll say, while there are areas identified by Vice Chair Barr on which we agree, including enhancing attention to liquidity issues, especially when a firm is rapidly growing, the bulk of the report appears to be a justification of Democrats' long-held priorities in calling for more regulation, right? So essentially, as of today, Republicans do not want bank regulation, essentially, okay? So again, this whole thing is, do we want more bank regulation or less regulation? And again, my opinion is that I'm fine with more regulation. Also, too, you can take a look at this. So Elizabeth Warren, she keeps saying this stuff over and over again. And I've told you guys this before. This is, again, a playing politics. She wants to blame Fed Chair Powell for all these problems, okay? So she says here, the Fed chief failed in his responsibility to supervise and regulate banks that pose a systemic risk to our economy, right? And part of what she said as well, and this was going back to, I think it was a month ago or something like that, and to be really frank, she was playing dumb, to be really frank. And what she would say, she'd say, Fed Powell, do you want all of these Americans to lose their jobs? You're going to be raising this rate and everyone's going to lose his jobs, and it's all your fault, right? And frankly, guys, that was just frankly a dumb argument. And unfortunately, a lot of our politicians make these dumb arguments. I don't know how else to say it, because the name of the game is that you want to always pass the blame onto someone else. Actually, we can look at a couple more details of the report here. You can see here, when it collapsed on March 10th, the SVB had 31 unaddressed, quote, safe and soundness supervisory warnings, triple the average number of peer banks, according to the report, right? Its senior leadership failed to manage basic interest rate and liquidity risk. Federal Reserve supervisors failed to take forceful enough action. So basically, this report is actually blaming a couple different parties here. For one, they're saying, okay, they came in, gave a whole bunch of warnings, what they call supervisory warnings, 31. That's like triple what most normal banks were. That the senior leadership at Silicon Valley Bank, didn't take the, possible uptrend of rates seriously, right? So they didn't take that risk, which is basic. And then also, too, you can make the case that even when the Fed had all these warnings on Silicon Valley Bank, they could have enforced them even more. This is sort of when, bank lobbying and maybe some corruption have been involved with this kind of stuff. Ultimately, we're going to see what happens. Would the Fed just print out money and try to save everybody? Maybe not. I think politically feasible wouldn't be popular for those of us who are old enough to live through the 2008, whole fiasco. It was really unpopular among my generation, people who remember this thing. And I don't think they would necessarily do it again. So, but who knows? You never know what they're going to do with this stuff. Again, it looks like there'll be some sort of deal made this weekend regarding this, and we'll see who ends up buying it out. Or, maybe they don't make a deal and we'll come on Monday and let this trade on the open market and we'll find out. I'd love to hear your guys' opinion on these things and also get your opinion on either regulation or deregulation. So you've already said my opinion, and I always appreciate you guys watching, and I'll catch you in the next video.